All right, welcome back for the episode of Carnivore Trades. Today is Friday, December 8th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So markets here today up 0.5% on the SPY and the Qs and the Dow. So a decent little uptick here for the markets. The big story this morning was unemployment rate. So we had the non-farm payroll number come out, and it came in it was like 10,000 jobs hotter than expected. It was like 192 versus 185 or something like that expected. So it wasn't like terrible. But the kicker was the unemployment rate uptick. So you can see the ES, and it was downticked. So from 3.9 to 3.7. And you're going to see here, we had a little shock candle to the downside. By the way, speaking of live day trading, we traded this with the RTY this morning, made a nice little score there before the market even opened. So nice little 17-point gain there on the Russell 2000. But in any case, why is the market up, right? That's supposed to be bad news. The unemployment rate going down means more inflation, essentially, effectively, right? But look, so here's the thing. We're going into the largest options expiry of the year, which is next Friday. Why is it the largest? There's leaps, right? So December is always the largest equity options expiration. And, unless there's a certain amount of realized downside, market makers are going to be buying back shorts. And you can see that happening over the last week. I mean, if we flip over to the SP, let's just use the spiders here. Every time we dip, it's higher lows, right? We closed below that trend line. I said we need to get follow through if we're going to break down. And we gapped right above it, kissed it, and then took off. We even kissed it basically twice today. Look on the intraday, we didn't even get there, right? So we barely even got there. And then we took off higher. So you have that kind of buyback effect, the Vanna charm effect, they call it. And you also have seasonality, right? The participation rate. Is the volume here high or low on the spiders? Well, we have 54 million shares at 3:18 p.m. here on a Friday. So it's still light volume. It's not terrible. It's not as bad as it was a week or two ago when look at this, we had like 49 million. But it's not heavy. And after next week, after CPI, after FOMC, the volume's going to get even lighter. So again, there's no real selling pressure enough to push the market down. Now, that said, if you took a look at yields today, and the dollar for that matter, this should be putting pressure on the market. All right. So again, this is kind of comes down to the macro versus the market mechanics and versus, obviously seasonal trends and so on versus the flows essentially. We can also take a look at the dollar index. This had a nice recovery. So yesterday we had that big spike down. Again, the yen, I think there was intervention there. The dollar came right back. So if you look at the yields in the dollar, you'd say, the market has to be down. But today, and really the last week or so, we've had kind of crappy data. And yields have bounced the last 2 days. And the yield bounced the last 2 days, the market's been green. So that's kind of the story right now. And I don't really see a reason to fight it right now. So until you get either a high volume reversal, high volume being 100 million shares or more, I think this market can still go higher. Now I could see, I know we've talked about a pullback here and we haven't gotten one. I could see a little bit more of one potentially next week. But the kicker is that from 46.40, right? Here's our 46.37 area. I don't see any reason why we can't get there. So could we the pullback could just be from 46.40 to 4600 or 46.85, and that might be it. The reason I say that though is because I think if yields do uptick for more than 2 days like they have, and I like this level a lot, honestly, on the 10-year. If you get a retrace to 4.5, 4.6 on the 10-year, I think the market's going to have to respect it. Again, remember, we have CPI and FOMC, so the market should move. There should be a little bit of life. Like lately, we've been dead, right? Look at the range on the spiders. Nothing, right? The last 2 weeks. So there should be a little bit of life coming back next week. And I think, again, if you get yields here to continue to uptick, the markets could retreat a little bit. Why would yields continue to uptick? Well, the technical level I showed you right there, but also if you're long bonds and you got to move from 5 to 4, a 20% move down in yields like a month and a half. Maybe you take profits ahead of the FOMC, say, oh, let's not risk it here. Let's get some money off the table there. I could certainly see that being the case, and maybe pushing up yields and maybe it's more profits taking in the market. Certainly a possibility, but I'm not so sure it's really going to be a tradable pullback. So right now, again, I'm going to use the SPX. 4607 is minor. We have consolidated beneath it for 2 weeks now, so that is now minor. And I'm going to give the market the upside bias to 4637. For the triple Qs, we're going to give the bias to, I'm just going to say 400. That's really the best I can give you right now. So again, looking at a weekly, there's your red bar high. Right, there it is. And then you got double top after that. I don't see that happening this year. Maybe in Jan, but we'll talk about that later. We're not even close to that right now. IWM here today up another 84 basis points. Again, I got a nice trade this morning on this one. And it's holding up, so no problems. Above 182, it's still very bullish. Below 182, it's not bearish yet, but it's less bullish. And again, right now, we had a big thrust Friday, thrust Monday, inside. If this just goes sideways, it'll easily get to the low 190s. So no problems there. The index I don't like, if I had to pick one to be short, it would be the Dow, just because this is parabolic. Even though we've had consolidation for a couple of days, I don't care. That's not enough. It's parabolic. Again, I wouldn't short it if I had to. If I had to pick one, this is what I would do. But, I'll just say that this can get to double top. But just be aware it's parabolic, and parabolic things go parabolic up and parabolic down usually. So that's the only index that kind of worries me a little bit. But again, Dow's price cap weighted, so we don't really mind it too much. SMH here up just under 1%. Again, AMD unveiling their chip thing, new chip card yesterday. Again, got a nice bid, and that's holding the gains there. So that's positive for the SMH and the SOX. Again, hitting this gap window and a nice little pop off of that. No real problems here with the semis. They can still go higher until proven otherwise. IGV, again, inside week. I don't like the island. I don't like the multiple islands. But again, trend is up. Respect it. Weekly, red bar high. That will be resistance. You're going to need weekly consolidation. 1, 2, 3, 4, 5, 6 weeks there. Plus a 75% retrace. Plus a weekly breakdown bar high. It's likely going to need to do some backing and filling. But again, it's holding up. And we'll leave it right there. For now, Dow transports here. Again, looks just like the Russell. Bullish inside bar on the daily. And as long as it's above this inverse head and shoulders, there's no problems there. And the transports can go higher as well. Interest rates we talked about. Now, I do want to talk about the short end too. Definitely don't want to leave that out. Look at the 2-year here. This is, I don't know where we're going to close today, but so 4.54. Excuse me, 4.712. Let's do that. There we go. We are above that right now, and I don't see any reason why we would necessarily close below it. We got 30 minutes left. That would be a failed inside bar on the 2-year. Here's what could pull back the markets back, or pull the markets back. If the 2-year, if this is a failed inside bar, which it is, I would expect a move up in the 2-year. So, and it could be pretty rapid too. So I would expect 4.8, maybe even 5. That could be something that would put macro pressure on this market. Again, it's fighting seasonality though. So just be aware of that. But that is interesting to me on the 2-year there, that you have now a failed inside bar pattern. So after all, remember last week I was like, man, they really spiked that 4.6 area and they closed it below on Friday. But sometimes they fake you out and it's holding. So this level's holding. Nice move there for the 2-year yield. 5's pulling up as well. And I do think 10s and 30s, again, should put in some type of a low here. I'm not so sure it's a macro low, but definitely a bounce level. So I do like yields. If that's going to, I don't know if that's going to take the market down, like I said, but in a vacuum, I do like the yields right now. So anyways, home builders likes the falling yield. New all-time high, new all-time closing high on a weekly. This can go higher. I don't have a level for it. It's at all-time highs. It is overbought and extended, but respect it right now until you get a high volume sell-off. VNQ daily consolidation above 81.42 on a daily close maintains an inside bar pattern. Below that would be a failure, and that could get a little dicey, but right now it's just holding up here. And again, you do have weekly resistance, sell off, retrace. That's where your buyers are trapped. They're going to turn into sellers, so it's going to need to base a little bit. Just keep in mind too that it's had a nice comeback, but the trend is still down. Like this has a lot of work to do here, but we're going to give it the benefit of the doubt for now, at least for the time being. But that's what's going on there with the VNQ. XLF here, really inside bar there on the daily inside week. Again, hit that 36 and a quarter level. Again, same thing with VNQ kind of. Down move, retrace, breakdown. That's where your buyers are trapped, right in this zone. You're going to need weekly consolidation there, most likely. But again, XLF holding up, leave it at that. KRE, again, down move, retrace. That's where buyers are trapped. That's where we are now. Maybe it gets up to 50. I certainly can't rule it out. Again, if you get squeezing towards the end of the year, that's kind of the only thing that can reverse that, can kind of overpower those trap buyers rather. So I can't rule that out, but again, it's coming into that level. KBE, that is above that pivot. And the next level is 44. So right there, and then here's your breakdown. So we'll be looking for that at the 44 handle potentially. XBD, there it is. So we're 3 points away, 2.5 points away, 522. That should get there. So that is not a short. That's just a target of the inverse head and shoulders. So XBD acting well. Crude here, getting a nice bounce here. I am no longer interested in longing this. I know some of you guys already did. I'll give it the upside bias to 74.75. That's it though. And there's no guarantee that this even plays out. If you look at a 4 hour, this could just be a bear flag. So just be aware of that. But, it's working out there. If it were to roll over, it's got to hold this level. Otherwise, it's going to 64, and then it's going to go down a lot harder. I will say I do not expect that to happen. If oil were to crash below this level right now, the policymakers would come in and stop it. Why? Because they do not want oil crashing in front of the holidays. You might say, well, why is that? Because oil down means less inflation, means Fed can start cutting faster. Yeah, but they don't want oil to crash, because then you're going to hear hard landing, you're going to hear recession, depression, margin calls, fund blowing up. Nobody wants to hear that while they're Christmas shopping. Policymakers don't want that. So I do think they'll want to keep a floor here for now. So I would be shocked if we broke below 66 for more than a quick spike. But right now, I'm not touching it. Didn't get to my level. I wanted it at 68, and it didn't get there. So it can go do what it wants to do without me. That's fine. I have no problem with that. XLE, leave it alone. It needs to go lower. XOP, it bounced off the level. We'll see if it can get a bid here. I still don't like it though. OIH, I do like it 280. We'll see if that can get there. CCJ holding trend here. Again, that can still go to 50. A lot of fund managers chasing. Be careful with it. URNM acting well. That can still go up to double top at 52 and change. That pattern is a little bit better than CCJ. Much less overbought on the bigger time frames. Nat gas pulling into 250 this week. Got to bounce off that inside day today. Nothing doing there. And we'll just leave that alone. Dollar index we talked about. That's been resilient. If this can get through 104.35, it can go to 105 and maybe even 106. I wouldn't rule that out. But right now I'm just neutral on it. If it puts in, if it takes out this low, it's going down to this trend line. Simple as that. So 101.50, 102. Gold here, continuing to pull back here down 1.34. Filling the gap. Remember when I said this? I said, well, look, we gapped up. We got a gap to fill. There we are. All right, so now we'll look at 2,000. My level here is 1950. If it gets down there, that could be a good level of support for a good trade. Just a short-term trade, but that's the level I'm watching there. On gold, GDX here. Sorry, but this inverse head and shoulders is going to fail. We got 30 minutes left. I don't know. Maybe they pump it up here. They could. So we'll have to watch that by the end of the day. I'm not going to take this all the way into the close. We've still got 30 minutes, but watch that by the close. If we can get above that, then this pattern is still safe. If not, it's failed. Doesn't mean it can't go higher. It just means we no longer rely on that pattern. Silver, Look at this weekly candle, humongous outside move. This is why I say don't chase. So, I couldn't tell you how many messages I got. Aaron, we got to buy silver. We got to buy silver. We got to buy silver. I said, no, don't chase it. It'll pull back. And lo and behold, we're $3 lower now. So just be aware of that. Don't chase. Market always gives you a chance. 23 in the near term, 22.50, 22. We'll watch it when it gets there. But guess what? This is coming down on heavy volume. It's telling you to get the hell out of the way. Don't jump in front of it now. Somebody with a lot of money came in on Monday. Look at the volume on that gold contract. You don't got that kind of money. I don't got that kind of money. JP Morgan, Goldman Sachs has that kind of money to push that down. That's mega player time volume. Get out of the way. Let it go lower. Platinum is much better. This is actually showing relative strength from the metals, up 1.2 today. I hope I didn't miss it. I don't think I did, but we'll see what this does. It's thin. I wouldn't rule out another push down, but we'll watch on pattern here for platinum. I do like it. I think it has bottomed. Palladium a little bit on the softer side. I don't know. I would say next level is about 900, maybe a pierce of that. Then copper actually doing some repair work the last 2 days. So kudos to copper there. It looks like it's going to close back above this trend line. Not that I really put that much weight behind it, but you got an inside week, big bar. You tested. I told you yesterday, I was like, if it closes down here tomorrow, well, that tells me a lot different than if it closes up here or even up here. It's not quite an inside hammer, but, it's halfway. So copper's definitely done a little bit of a repair job. And again, I'll just say, if you get through this, you can go to 4. If this takes out this pivot, then we could see a lot more downside on the table in the cards, but right now it's fine. So we'll leave it at that there. Bitcoin heading 44. Look at that big dump on the non-farm payroll today. So it tells you how crazy thin the market can be right now. Not so much thin, but when you get to these lofty levels, how quickly things can flash crash and, the big volatility can come in, at any time. But right now, again, we'll just give it the upside to 48 until you get a high volume reversal. So we'll leave it at that. ETH basically got to target. I talked about 24. We got to 23.92. And that can still go higher too. I don't see any reason why it can't. A little stretched here, but it's on breakout. So we'll give it the benefit of the doubt. Look, Solana, told you guys I like that too. That should get to 80. So crypto's still hanging in there just fine. All right, lastly, spiders here. Let's look at the SPX. So we're at 46.05. Be interesting to see if they close above 40. I think they will. They'll close above 46.07.07. That was the exact high. You can see it right there. But either way, I would give the market the benefit of the doubt to 46.37 right now. And again, we'll see. Monday will probably be quiet. Tuesday, CPI in the morning. And then we have the FOMC Wednesday, so it should be fun next week. Get out of this damn range, and we'll actually get some volatility, hopefully. Anyways, guys, going to wrap it up here. You guys take care. Come find me at carnivoretrades.com. Talk to you guys all next week.